When selling your accounting firm, how important is seller financing?
Seller financing is so important when you make the decision to sell your accounting firm that I will tell you this. If you're not going to accept seller financing, you're not going to sell your accounting firm, or at least you're not going to sell it for more than a fraction of its value. So your next question probably is going to be, what is that seller financing going to look like for me, the accountant selling my accounting firm? Typically, when accountants sell their accounting firm, it's not unusual to receive about 30% of the sale price in cash and about 70% of the sale price in owner financing. So if you had me do the business evaluation for your accounting firm, as an example, and we valued your firm as $500,000, you could figure about 30% of $500,000, $150,000, is what you would get cash at closing, and the balance, the $350,000 balance, will be paid to you in monthly installments. Now, all this has to do with the common sense factors of what your business produces. In other words, the monthly payment on the owner financing note that the buyer, the new owner, makes to you, the seller, the former owner, has to be in ratio to what the business produces. For example, in a $500,000 firm, and let's say you're taking out a $50,000 income and a $50,000 bonus at the end of the year, $100,000, is there an extra $5,000 a month for debt service? If it's not, there's going to be a bit of a problem. An alternative to a seller finance note is an earnout. An earnout is another form of seller financing, actually, which basically says the buyer will pay you a percentage of the earnings of your business. Again, using the same example, a $500,000 firm, and the owner's taking out a $50,000 salary, and there's a $50,000 profit at the end of the year that he can distribute to himself or reinvest back into that business. An earnout might say, here's your $150,000 up front. For the other $350,000, here's how I'll pay it to you. I will pay you 10% of your monthly billings. So if your monthly billings, as an example, is $40,000, they'll pay you $4,000 a month. If your billings drop down to $30,000, pay you $3,000 a month. If the new owner brings in all new business and ratchets it up to, say, $100,000 a month, then he could pay you $10,000 a month until such time as the agreed upon sum, the $350,000, is paid for in full. Again, please note this. Expect owner or seller financing to be a part of a sale when you sell an accounting firm. The reason for this is very simple. The value of the accounting firm is the value of the clients and the reputation of the firm. There are very little hard assets with the firm. If you sell a manufacturing business, there's machinery. If you sell a retail business, there's inventory. When you sell an accounting firm, it's all about the value of the clients, the repeat business of clients who come in every single year, the business that you get from bookkeeping fees for those clients every month, and of course all the new clients that come in. Because of that intangible value of that, expect almost 100% of the time to do owner financing or get a much lower price for your business.